Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Harmony One, whose current price stands at the $0.02589 mark. And here on TradingView, the market is up by 6.93%, and I want to give my key scenarios basing my analysis on the Elliot waves and the Fibonacci's, and also the key areas of support and resistances, and also show you the key patterns that you have information on this chart. So if you're interested in such content, make sure that you stick around till the end of the video. And I'll kickstart the video by giving a brief of what has been happening on the Harmony One chart. From the all-time high, you have been seeing lower prices in this massive ABC correction, which has now taken us to around the $0.016 mark. And having done so, I believe Harmony One has done the minimum that we expected it to do in its ABC correction. And before we start seeing a very nice bounce to the upper side, there are key things that we need to have in mind. Here on the chart, you can see using the Fibonacci's that we lost a key area on the Fibonacci's, that is the Fib level 0.88, which is a key Fib level for all cryptos. And having lost that key area on the Fibonacci, that means Harmony One, whatever we are seeing, is much of a recovery phase. And also having in mind that Harmony One has lost $100 million in the Horizon Bridge hack. The Harmony One team has also given us the proposals that they are proposing on how they want to repay the money that was lost during that hack. So whatever we are seeing here on the Harmony One chart is much of a recovery phase, and I want to give the key scenarios that I expect to play out here on the chart. And I'll start by looking at the daily chart. And if I zoom in on the daily chart, here on the daily chart, you can see we had been trading within this channel, which is right here, which is a descending channel. We managed to break to the upper side of the channel, also managed to break above a key area of resistance, which is right here at around the $0.023 mark. We have even continued pushing even higher here on the daily chart. And if I jump to the 4-hour chart for further analysis, here on the 4-hour chart, you can also see that we had been trading within this ascending channel. And as we were trading within the channel, we were making a series of highs because the buyers were trying to push the market to the upper side. But at some point, the buyers lost it to the sellers, and the sellers took over. We broke out of that channel to the lower side. We went to this key area of support down here at around the $0.018 mark, then started seeing a very nice bounce to the upper side. And we also have this key area of support at around the $0.021 mark, which I've marked out here on the charts using a yellow marking, which has also been giving us support. And we have seen a very nice bounce to the upper side, managed to break above this key area of resistance right here. And we have also seen a retest of that key area of resistance here on the 4-hour chart, and that would mean higher prices could be coming our way, and that is what has been happening on this chart. This movement has also invalidated a pattern that I had here on the charts, which is a head and shoulders pattern. And if I draw it out here on the charts, having this top here as the left shoulder of that head and shoulders pattern, then we have the head up here, then the neckline, and the movement that we are in, I expected it to form the right shoulder of that head and shoulders pattern. And for that to play out, I expected that if we lose this key area of support right here, we might see a pullback to the lower side, which could take us to around the $0.018 mark. And having done so, that will be completing this head and shoulders pattern. But you can see now we are having a very nice bounce to the upper side, meaning that this pattern is now being invalidated. Having invalidated that head and shoulders pattern, that brings me to the key scenarios that I expect to play out on this chart. Now that you have managed to break above a key area of resistance, had a retest, and the retest was a success, and you have continued pushing to the upper side, it's possible that we might continue unlocking higher prices and go to around the $0.029 mark, where we have our next key area of resistance. And at that point, we can either break to the upper side or we can get rejected at that point. And if we manage to break above that key area of resistance, I would expect to see a retest of this area before we continue unlocking even higher prices, and that could take us to around the $0.0346 mark. We could also get rejected at this key area of resistance, and if that plays out, then I would expect to see a pullback to the lower side and take us to around the $0.02365 mark, where we have our next key area of support. And then from there we can either find support or we can break to the lower side. We also have an inverse head and shoulders, which is information here on the charts, which is a bullish pattern. And if I draw it out here on the charts, we can have this as the left shoulder of that head and shoulders pattern. Then we have the head down here. Then we have the neckline. Then the movement that we are in, this is what is forming the right shoulder of that pattern, and I believe we have completed its formation, though it's not that perfect, but it's a head and shoulders pattern, and it's a pattern that normally breaks to the upper side, having the target area of the breakout as the height between the neckline and the head. So using a trend line, we can get the height and place it at the area where it's possible we might see that breakout to the upper side, and that gives me a target area to around the $0.03223 mark. And if that move plays out, I'll keep you updated, and it's very possible because we have had a retest of this key area of resistance and we have massive support for us to support any movement to the upper side, so this breakout could be possible. Let's be patient and see how that plays out. And if I jump to the indicators to see whether those movements will be supported, here on the RSI we are trading at around the 71 mark, and that would mean we don't have much of room for us to continue pushing higher here on the RSI, and that would mean maybe lower prices could be coming our way as we try to create some room for us to continue pushing even higher. On the MACD, we have printed a bullish cross, and that would mean higher prices could be coming our way. So let's be patient and see how that plays out, and I'll keep you updated.